My name is Elena Krasnow. Welcome to Press Play, the StreetCred Podcast. I'm so grateful you're here. I'm the marketing manager at StreetCred PR and your host for today's show, along with co-host and managing partner Jimmy Moock. We break down the show into two segments: press, where we talk about all the hard news about our guests' life and their professional goals, and then play, where we have a little fun with it. Today, Jimmy and I are happy to welcome Don Bennyhoff to the show. To give our listeners a little more background on Don, Don is the founder of Bennyhoff Co, a fractional CIO consulting firm for growth-minded RIAs, family offices, endowments, and foundations. He has worked in the financial services industry for over 30 years and is a chartered financial analyst. He most recently served as Chief Investment Officer and Chairman of the Investment Committee at Liberty Wealth Advisors. Shout out to James Gladney. In 2020, Don retired from Vanguard after nearly 23 years, where he worked as a senior investment strategist. Don was also a co-creator and co-author of Vanguard Advisors Alpha Research, which is highly regarded in the financial services industry and plays a key role in shaping advisor best practices. Don is also an expert content creator known for his market commentary, blogs, and articles. He's published content in various media outlets, including the Wall Street Journal, Barron's, CNN, MarketWatch, among many others. He is also a father of four, a grandfather of three, and devoted husband. He supports the fantastic efforts of the Teton Regional Land Trust, the Native Fish Coalition, and Real Recovery. Don, welcome to the show.
Thank you very much, Elena. Appreciate it.
I know you said we could shorten your bio, but I refuse. We got to give you all of the flowers that you deserve.
Well, I wish you had taken a little bit less time, but yes, I think it just proves I've been in the business a long time.
Don, we're really pumped that you're here live and not doing the recording from some riverside while casting a few lines.
That
Thanks,
would be
Jimmy.
good for Press Play Live, perhaps.
Yeah, we'll have to test that out.
Yeah, that sounds like a good model. Awesome. Well, Don, we start off all of our segments with the same question, the most important question we ask, which is, what did you have for lunch today?
I'm not gonna lie. I was planning to have a salad, but I thought I would wait till after the show, so I didn't end up with a big piece of spinach in my teeth, and it ended up going viral for all the
Fair
wrong
point.
reasons.
What kind of salad? Let's dig into it.
It's going to be spinach.
I love a
Spinach?
spinach salad.
Fresh baby spinach is pretty much my go-to.
And what about tomatoes, cucumbers, carrots, croutons? What do you add to it?
Whatever I have on hand, quite frankly. I mean, it's always one of those things. I love grilled chicken on it. We're not quite in summertime yet, or you'd start to get some fresh veggies in there that right now are not as tasty as you'd like. But yeah, not too particular, Jimmy.
I love a summer spinach salad with like strawberries, goat cheese, balsamic, that kind of energy.
Yeah, it takes a lot of energy to actually put that together, though. So I usually shortcut it.
So you might have been reading my mind, knowing that you are also a Pennsylvania guy. Have you tried the salads at the bar at Wawa?
I have not. I haven't heard about the salads at Wawa.
Oh yeah, yeah. They have.
How is that possible?
I don't know what you're missing, but I do know what you're missing, and you've got to get to Wawa soon. Pass on the Hoagie Fest and definitely try one of their salads. They're great.
Wow.
I don't know. I have to wait until Jason Kelsey blesses it, because Hoagie Fest is kind of his thing,
Yeah, right.
or his John, as they say here.
There you go. There you go.
We got to be careful, Jimmy. Wawa is going to try to steal you as their number one representative if you keep talking about them.
Well, we're also trying to get advertisers to underwrite Press Play. So, this episode is brought to you by Wawa.
Soon to be sponsored by. Absolutely. All right, Don, let's get into it. I want you to take us back to the beginning. We'd love to hear about your background. Start as early as you want, where you grew up, and what eventually led you to your incredible career at Vanguard and then later launching Bennyhoff Co.
Well, thanks. I promise I'm going to keep it way shorter than your intro, just because it's a big believer in control what you can control, and this is one of them. So, actually, I started in the industry over 34 years now as a traditional FA before I joined Vanguard, eventually joining their investment strategy team where I worked for a little over 20 years. So most of my career was in this research team for Vanguard, looking at the various topics. Really the first time that Vanguard had a chance to position themselves as thought leaders and not just fund providers. This was in the early part of the TMT bubble that started in 2000. So a lot of people were interested in Vanguard's point of view, and we just happened to be at the right place at the right time to kind of fill in the blanks about various investment topics, questions about, what asset classes were worth considering and things like that. So very cool effort because it was very entrepreneurial. It was kind of things that Vanguard really hadn't tackled in the past. So kind of allowed us to potentially, affect sort of the voice of Vanguard, if you will, at that time. And it's been an honor to be part of that with a really, really good team. But decided to retire during COVID, and that's when I joined Jim Gladney and Liberty Wealth Advisors. He was someone I got to know during my time at Vanguard. When I announced my retirement, he pretty much contacted me within about 30 minutes and said, "Hey, would you be interested in joining us at Liberty Wealth Advisors?" So, yes, we talked for a little bit, and 3 weeks later joined them, eventually becoming their chief investment officer. But then Liberty was sold almost 3 years ago, 2.5 years ago. And I decided to retire, took a little bit of time off. And then after kind of thinking about all the free time and the honeydew list that my wife was coming up with, decided I still had some interest in helping the financial advisors that I helped for so long when I was at Vanguard. I always really enjoyed working with financial advisors. I felt like I had a kind of a unique perspective because I had been on both sides of the discussion, if you would, as a financial advisor, trying to apply what I'd heard or had been provided for me by strategists, and then after being part of the strategy team, helping craft the messaging and the context for those conversations for advisors, really with the emphasis on them being useful, not just interesting.
Yeah.
So with Bennyhoff and Company, it's been quite a very straightforward effort. As you said, I'm really focused on the advisor marketplace, people in the family office space, and those nonprofit organizations that are really investing for the benefit of others. And that's really what I'm trying to do. I took a page out of Jim Gladney's book, in really embracing servant leadership, which I think was second nature to us after serving at Vanguard, because, Vanguard is the only, company of its type that's owned by its mutual fund shareholders. So we always worked it for our shareholders' best interest. So that was very easy to continue on and embrace at Liberty and then at Bennyhoff and Company.
So what you're saying is, as a Vanguard mutual fund participant myself, I'm allowed to go to the cafeteria and have lunch for free. Is that right? Sorry.
You are more than welcome to request a lunch at Vanguard, whether it's for free or not. I don't think that's the way that it generally works, but I'm sure if you wanted the Vanguard eating experience, it could certainly be arranged, Jimmy.
We're still fixated on lunch, clearly.
So obviously recently Mr. Munger passed away, and a couple of years prior to that, another luminary, an icon, Mr. Bogle, also passed away. And I'm wondering what was it like running into him in the halls at Vanguard? How much time did you get to spend with him in person? I was lucky enough once at a investment news conference where Joe Duran was actually being included in an award ceremony, but Mr. Bogle was there, and I got a quick selfie with him, and it's a lot of fun when it comes up as a reminder via my Google Photo app.
Uh, yeah, I was really fortunate to my office and our team was always set up in the same building and often on the same floor as Mr. Bogle. When I got to Vanguard, he had already gone through his heart transplant. He had already turned over the reins to Jack Brennan at that point and was currently, chairman of the board. But he always had even after he retired from Vanguard and the board, he had office space in our building. So you would see him. He was always a very friendly guy. It was, I never had a lot of firsthand engagement with him, but whether he knew you or not, he was always willing to, stop and say hello in the hall or what have you. So it was always really informal, but I will say that a lot of the work that we did while I was in the investment strategy team certainly, crossed his desk as it was meant to do. Our job was to represent sort of Vanguard's thoughts on a particular topic when it came to building portfolios and the like. So Mr. Bogle, especially with some of the research, Advisors Alpha is certainly one of them. He was a long time, very vocal advocate for do-it-yourself for investors, and quite honestly took a lot of shots at the traditional financial advisors for, charging a lot of money, doing a lot of trading, really not really delivering the value that they claim to be delivering. And so when we came up with Advisors Alpha and started talking about how, when advisors started reevaluating how they were going about adding value, that we felt that they really could be very beneficial to the individual investor. Mr. Bogle did have some words for us. Thankfully, we were able to work it out. But yeah, he was a very interesting, but also a very generous person with his time and attention.
What do you think he would think now of the RIA landscape? As obviously there's fee compression happening on the investment side, and you could argue that there are now different ways that end investors engage their financial advisor, whether it's fee-based, fee-only, hybrid, subscription-based firms are out there. Do you think that maybe he was thinking about the brokers that he was used to and the churn that they might have driven versus what someone might talk to today about a contemporary RIA?
Yeah, I think Mr. Bogle was incredibly bright and very aware of the industry and the industry trends. So remember when we started, the work on Advisors Alpha, it was at the very beginning of the 2000s. And the traditional broker model where people work with advisors charged, and, they were paid based on commissions and other, sales loads and other transaction oriented compensation. That's what Mr. Bogle was principally concerned with. And so are we in the process of the research that we did. That's why the cornerstone of the Advisors Alpha philosophy was that we believe that advisors really can add value to the equation, but more as relationship managers than portfolio managers.
Yeah.
So, advisors were emphasizing their investment acumen, but really we felt that where they could add more reliable benefits was through things like behavioral coaching, helping the clients better assess their risk, better deal with the environments when you're tempted to change. And while you kind of think about environments like we're in right now, where you have bear markets and the market's losing, X% for days on end. Those are certainly challenging, but it's equally challenging not to change your investment philosophy when things are doing great. So you don't end up with a portfolio that looks like nothing but Mag 7 stocks.
In regards to the Advisor Alpha study, and yes, you alluded to where we are right now in the markets given tariffs, and I would imagine that where you were then and where you are today in terms of how you're helping firms and clients really understand how important behaviors are. What is the top message that, before we hit the record button, you were talking a little bit about it, but when it comes to fear in the streets and seeing red on CNBC or Fox Business or Bloomberg, and then the next move is investors will look at their 401k or their IRA, and you feel it in your stomach. It hurts. What's your message to them today?
You hate to be trite, but so often it's trite because it works. That simple message about, staying the course and realizing that the reason that you invest is that you're consciously putting your assets, you're putting your money at risk. That's why you receive the returns. You don't get paid for not taking risk. That's why people don't put a lot of money in T-bills and, cash investments and kind of call it a day. And risk is what we're seeing right now when things don't turn out really the way you expect. That is, to me, the most convenient and the most useful way of thinking about risk. It's not the statistical definitions. It's more of the fact that risk is uncertainty, and it's the doubt that's created when things don't work out as intended. It is very important for advisors to understand that, because that is an aspect within their control. Personally, I prefer to try and, raise the points without overplaying those aspects. So when it comes to, for example, portfolio construction, if you choose to use actively managed strategies, you need to be prepared for that time in the future when those strategies are not going to deliver the returns or protect your returns as well as you intended them to be. And at that point, the client is going to feel like they're beginning to doubt that they're doing the right thing. The news headlines probably are going to, reinforce that idea that you should be doing something different because it is different. So it is one of those things where if you embrace certain strategies that create maybe more uncertainty, as opposed to owning a broad U.S. total stock market fund, if the market drops today 5% and the fund drops 5%, it's doing exactly as it was intended to do. On the other hand, if you have a fund that drops more than that, when you thought it was actually going to drop less than that because it isn't the market, then you begin to have doubts. And, it's aspects like those that I think are so important, because behavior is the number one reason, in my experience, that people don't succeed when it comes to investing.
Yeah. Yeah. And I would definitely say, you are someone in the industry that I think of as someone who gives great advice to advisors and investors alike. You are well known for a lot of the thought leadership that you create about investing, especially for your powerful metaphors. The Yogi Berra one is the first one that comes to mind. I would love to hear a little bit more from you, Don, about, some of your favorite investing analogies, how you come up with these parallels, and why they're so salient for readers and the people that they're meant for.
Well, I don't know about powerful. I mean, my aim is to try and make things useful. I've always lived by sort of this idea that there's two types of information. There's interesting and useful. And interesting is what most of the media, most of the talking heads kind of, um, you know, really lean heavily into because it's more of infotainment. Whereas useful is a different
Yeah.
purpose. It's a different aspect. It's a different reward if you're a content creator. I want people to not only, read my stuff, but also apply it. And I think that's where, you know, thinking in sound bites to me is the easiest way to kind of connect, um, with some of these topics. So, I honestly, I do a lot of reading. Like when you're in the business long enough, all you do is you look around and it's amazing how many things have parallels that can be used well with investing. Now, some of them are a little obscure and some of them come from really surprising. Probably my favorite was one that occurred to me in the middle of the night because
Those are
I was
always the
reading.
best ideas.
Yeah, you're semi-conscious and kind of
Yes.
thinking as abstractly as you can. But I had been in the middle of reading a great book on Roosevelt's exploration of the Amazon. And it was called The River of Doubt.
Mm.
And like in the middle of the night, I'm like, wow, that's an amazing, analogy that could be used with investing. Like, you go through all this unknown, all this uncertainty, all this doubt. You go through hardships and, while Teddy was actually, he was in physical, harm's way as opposed to financial harm's way. Um, a lot of the reason they succeeded was because of his reliance and he had an excellent guide and to take him through that process and stay with him through thick and thin. Like it doesn't take a rocket scientist to
Yeah.
to draw the connections with financial advisors and how, if they approach things in the same way, that they can be an invaluable resource in getting their clients through some of these tough times.
Totally.
Indeed. And I would assume that the Amazon has some portions of the river that would be or could be described as rapids, which is where we are right now.
Yes.
And then perhaps some other portions of the river around the bend might be a little bit calmer, but we have to wait till we get there.
Yeah,
Yes.
absolutely. I'm not sure which has more predators on its banks, but the Amazon or Wall Street. So I think equally are dangerous in different ways.
Indeed.
It is an apt comparison. Can you tell us a little bit about the Yogi Berra one from the Kiplinger article that you wrote?
Sure. Well, I grew up a baseball fan and like it's always very interesting because like when you think about some of the like Yogi Berra is always associated with those aphorisms and his double speak and misspeak, misspoken context and um it was very interesting because it was kind of a way to make things interesting yet still make a point. So like I still think that in unfortunately, I'm not sure if he actually said this or if it's just simply urban legend, but he has one of the quotes to me that I've always tried to lean very heavily into in a lot of different times, and that's that in theory there's no difference between theory and practice, but in practice there is.
Mm.
And especially in our industry, so many people lean on modeling, they leave on theory to sort of prove their points. And I really, after all this time in the business, we've seen a lot of strategies kind of come and go. What you tend to find is that it's, that strategies with no, sort of back testing or backstory in support of their their way of doing things, they're never going to come to light. So all these new things always rely on these great back tests, and so often those things just don't play out as intended in the future. And that's what I mean about, like, when people agree, or they buy into these strategies, it's really important to understand that when you put these things into practice, they're not going to generally work as intended. That doesn't mean that they're a failure. They just may not work in the time horizon immediately after the client adopts the strategy, buys into the philosophy.
Sure.
Probably what we're going through right now is the most obvious parallel to me, this idea of, people who embrace the small cap and value strategies that have been out of style for a while. After the TMT bubble, that ran into 2000 to 2003, a lot of strategies came out in real, in support of sort of the value, the growth, the traditional femme French kind of styles. And they did particularly well when a lot of those large cap growth stocks didn't do well in that early part of the 2000s period. And I think, a lot of people bought because they assumed that they were going to inherit those returns, and, that they were what's going to happen in the future. And it, unfortunately that wasn't the case. That doesn't mean that size and style or the DFA or the femme French type of framework isn't valid in the long run. It just didn't happen in the horizon when people needed it to happen for them to sort of avoid the doubt that they were doing something wrong. To me, that's like another example of, like, when we're going through things, and if you really believe in those strategies, then make sure that you're doing all this behavioral coaching to prepare people for those periods when they are out of favor, knowing that they will be out of favor at some point. That's why when a lot of people talk about behavioral coaching, they think in the moment, and yet in the moment, it's often too late. Yeah. Really, to be effective in the moment, you have to coach and do this behavioral coaching in advance.
Totally.
And that's why, my emphasis, the emphasis of our research in the past at Vanguard had been on proactive behavioral coaching, because some of these things, it's very easy to imagine periods of time when they're not going to work well. And then you don't want to just make it sound like you're making excuses for the strategy. Mm-hmm. You can actually, head off some of those conversations if you really believe in them. Then, present not only the good, but also those not so good periods, letting people know that it's probably going to be both in the future. We just don't know where or when.
Totally.
So I know that no two investors are the same. Mm-hmm. Everybody has a different tolerance for risk, and people retire or phase into distribution at different points. One of the most often talked about strategies is the 60-40 portfolio. Your thoughts on it? Is it still a right starting point for today, with the understanding that, again, every individual is unique and there might be some deviation from 60-40 to whatever, but where do you land there?
Jimmy, that to me has been one of the most interesting debates that I've seen in my career, mainly because it's often presented as if it's some sort of magic bullet. There's no magic to it. It's just a choice among choices. In my experience, most clients tend to be more moderate in both their desire for growth as well as their ability to bear up with the losses that often accompany growth seeking. And so I think 60-40, one, it tends to be a bit more of an institutional focus. So you often hear it associated with institutional accounts, and often people view that as sophisticated. And so retail investors, individual investors, try and follow the sophisticated, knowledgeable crowd when really they're created for similar purposes, but they couldn't be more similar or dissimilar in their natures between individuals and institutional, investors. To me, when you look at 60-40, it's just very close to 50-50. And in my experience, most individual investors tend to be, somewhere in the middle. They usually have 50 to 60%, stocks and the balance and bonds, which is why I think it comes up so much, because it seems so applicable to so many. But in reality, the asset allocation is where too many people start the conversation, when really the asset allocation is an output of the financial plan, not an input. And so in my opinion, the proper approach to dealing with how should I invest my money from a stock bond asset allocation type of conversation is you start with, what am I investing for? Like, start with the financial plan, start with your investment policy statement, start with the idea of that your portfolio is there to serve a purpose, not just to gain returns. A lot of clients, and I've found, a handful of clients that have been incredibly fortunate in life, where they have enormous wealth and very low, spending needs. They have the ability to take as much or really no risk with their portfolios and still come out well ahead and achieve their end goals. Not everyone has that flexibility, but to sort of realize that really you need to start with the plan and what you need your portfolio to do to help you achieve your goals. That's the place to start, not with the conversation of, is the 60-40 portfolio dead? Because a lot of different ways to spin that conversation.
Totally. I hear you. Well, just so you know, you're talking to a 90-10 guy, and I'm feeling the pressure right now.
Thanks for that perspective, Don. I'd also love to hear a little bit more about what the experience of starting Bennyhoff Co has been like for you. Is this your first foray into entrepreneur life? What are some of the firm's core focuses for this year? How was it at the start?
It is definitely my first foray. I've been very, very fortunate in my career where, almost all of my contributions and my focus has been on sort of the investment and relationship management side of the equation. And I've gratefully been left out of the management, the operational, the human resource, the legal and compliance. And, I'm getting a crash course in what it really takes to
nodding your head in solidarity, Jimmy,
to be involved in it. But, it's what, as they say, what doesn't kill you makes you stronger. So I'm still here kicking and really enjoying it. Mainly because it gives me, again, a chance to work with people that I like working with, people that I can choose to work with, which is a big part of I think my success, or my equation for what I dream of is success. Really those people that you love working with on a day-to-day basis.
Yeah, that's the dream. Awesome. Well, I'm going to move us along into our play segment, which is pseudo rapid fire. First question for you, Don. I have heard from the halls of StreetCred that you have aspirations to become a professional fly fisher. And is that what you'd be doing if you weren't in wealth management? Did you have any dream jobs as a kid? Like, what else would you be doing if you weren't doing this?
If I could figure out how to make money in fly fishing, it would be very tempting. But then there is the other side of it after thinking about it. And I often worry that if I tried to turn it into my career, or it might turn into work and just seem like a job. And, I don't want to do that to
That's sacred.
That's my
Yeah.
John. I'm just kind of I think of myself as just like a normal guy. Like, growing up, I wanted to be a pro baseball player.
I love it.
If, it's no different than, probably every other kid that rolls out of bed and, wants to go in and do something, whether it's baseball, basketball, football, you name it. I certainly didn't roll out of bed and say, I think I want to become an investment strategist or,
I
But you
do.
still tied in the baseball. You found a way.
Well, I wanted to play for the Sixers, but it turns out I'm not athletic. I can't shoot and I can't dribble. So I got into PR.
For me, it was Michelle Kwan, figure skating.
Oh, yeah. Now, how did your parents deal with that?
Well, my dad took me to figure skating lessons for a few years, and then I think, as many children do, I got interested in something else and was like, I never want to go to figure skating again. Now we're doing acting, But I did a good project on her in the third grade for sure. I think really impressed some people with that one. Anyway.
You could have pulled it off.
So I know that Elena's about to ask about fun, but before we get there,
yes,
knowing that you are a Philadelphia guy, I have a quick question in terms of number one, are you a 4 for 4? And if so, it's safe for me to assume that probably the Phillies are at the top, but give us the order of our professional sports teams and how much you love them and follow them.
In our household, we've always been baseball players. So I will say that probably our oldest memories as a family, which kind of to me is how we think of things. It's been surrounded with the Phillies. But as the kids got a little older, I have four kids. My two youngest happen to be the most sports enthusiastic. So they really have a broader perspective on, like, Sixers. We're not much for hockey, I would say, but
Same.
At this point, Phillies and Eagles are neck and neck. Thankfully, we don't have to, at this moment in time, have to worry about picking between a Phillies game and an Eagles game. Hopefully that's a different story come the fall.
Yeah, true that. Or when the year comes and the NFL is now playing 26 games a year just because they know how lucrative it is and that we'll continue to watch. And then you really have to make choices.
Exactly.
Absolutely. So besides baseball, what else do you do for fun?
Well, there is the fly fishing, which I'm pretty sure, myself and a couple of my friends are, candidates for a 12-step program there. But I would say, especially over the last 9 or 10 years, it's, we've been fortunate to have 3 granddaughters, and we have our first grandson due at the end of the month. So our grandkids are starting to take up a little bit more of our time. They happen to be evenly distributed between Colorado and Florida. So we are spending a lot more time doing trips back and forth there.
Fun.
That is key because now you decide when Pop and Mum, if that's the nickname that you use. I'm sorry if you use something else. But when you get asked to be a babysitter so that your children can go out for a night in town, it's not as if they can call you up at any time and ask you to drive over. There's some states between you. That's good.
But
speaking from personal trauma, Jimmy,
I would tell you that I benefited from that. So we've grown up in the suburban Philadelphia area. My parents are from here. My family's been here for over 250 years. So I must admit, I benefited from a lot of those calls, Jimmy. So I do feel a little obligation to pay that forward or pay back some of my parents' generosity.
That's awesome.
Awesome. Well done. We close out the show with a moment of gratitude. Give you the opportunity to shout out someone in the industry or someone in your life. Just say something nice about someone who may or may not be listening.
Oh, you're going to make me pick one person? Wow.
I mean, there's no hard and fast rule, you know. If you have a few, we'll take it.
All right. I'm going to generalize because personally, I consider myself like the luckiest individual because I've been so fortunate to be in the right place at the right time my whole career. When I started in the business, it was at a wirehouse. Um, I had some amazing mentors there that taught me to do the right thing. So even in an industry that was still charging commissions and, maybe not living up to Mr. Bogle's standards, I had some really great tutors early on, and that just persisted through the rest of my career. I worked with amazingly hardworking and smart people at Vanguard. Thankful that I can consider, a lot of the people, they're still my real close friends. I see them all the time. We talk all the time. Been able to carry that into like every aspect. We talked about Jim Gladney and the all of the folks at Liberty Wealth. I've been fortunate to that. That's probably the one bad thing I found so far about starting my own firm is I no longer have those people on the inside they're sort of on the outside looking in, but again, just grateful that at any time they'll take a call. And if I want to bounce an idea or spitball with them, they always are happy to share their experience and knowledge. And, I've just kind of taken that part and try and, again, do the same. Talk with a lot of people that are maybe young, getting started in the industry, want to kind of figure things out or talk about things. Always happy to talk with those folks myself. Again, just paying back a little of the kindness that I've gotten.
Absolutely.
So cool.
That's your good karma shining through, not just luck.
Well, I think it's everyone else's good karma, that's just being reflected off of me. And I hope to shine it on someone else.
Sounds exactly like someone with excellent karma would say. Awesome. Well, Don, thank you so much for taking the time to chat with us. This was so much fun. To our listeners, we hope that you learned something new and enjoyed hearing Don's story. Be sure to write us via email at pressplay@streetcredpr.com to tell us what you think, ask us any questions, suggest any guests, or tell us what you like on your spinach salad. We are dying to hear. Thanks again for tuning in, and we can't wait to introduce you to our next guest. Bye.